a $31 million fund in this economy.
That's right.
It's like
That's right.
incredible. So I'm really
You're
excited.
we want to spend time working with founders at this very early stage because I think
Mhm.
that is authentic to who we are and where we like to spend time.
Hello, everyone, and welcome back to Seed to Harvest. I'm really excited to have my friend Rishi Taparia on, who is the managing partner of Garuda Ventures. I was going to have you introduce yourself, but I realized I just gave it away. Do you want to start by sharing like a quick 2-sentence bio about yourself, and then we'll hop into the conversation today?
Yeah, absolutely. Rishi Taparia, co-founder and managing partner here at Garuda Ventures. We are a pre-seed and seed-focused firm investing in founders building at B2B with up
Mhm.
to $1 million. We want to get in, we dig in early, and are excited to be on this journey as we have recently launched our own fund and concluded our fundraise earlier this year. And so excited to be on the pod with you.
I was joking earlier. I was like a $31 million fund in this economy.
That's right.
It's like
That's right.
incredible. So I'm really
You're
excited.
very kind.
Yeah, of course. I love seeing the other emerging manager homies win. Okay, let's see. What do I want to start with? Do you want to, for the context of our listeners, explain how we met?
Yes, Paige, you and I. Well, first, I think we met on Twitter,
On Twitter.
as so many great relationships start. But
Uh,
when you can move your Twitter friends to your IRL friends, that's that much better. And so we were at a dinner together with a bunch of different emerging managers and LPs, all talking and building the network and commiserating about how hard I think it is to raise in this market and what we're all excited about. And that's when it was great to meet you in
I
person.
know. I think it was
And
like 3 years of being online,
that's right.
tangential.
Ex-
And I was like, wait, I have so much context for your story.
yes,
Yeah, wait. So, okay, break down what was it like? Okay, first, one of the questions that a lot of emerging managers ask me, so I'm curious to get your take on this, is like, what was that like seed? Or walk me through kind of like the hours of deliberating on like, okay, I'm gonna go raise a fund.
It was, the genesis of Garuda largely was how do we support founders in the ecosystem with advice, time, and capital.
Hmm.
My co-founders and I are all former operators, founders, and when we were building companies, we, naturally, as one does, you get called, hey, what do you think about this? Hey, I'm raising this money. Can you make this introduction? And so on. And so, Garuda Ventures started in 2018 really as a micro fund MVP proof of concept. It was a nights and
Hmm.
weekends passion project. And so we raised just under $3 million for this like baby fund, essentially to act as glorified angels, but with other people's money and then taking it very seriously since we had other people's money, investing $50,000 to $100,000 into founders and just trying to, bring some of the learnings and insights we had building companies, navigating through the similar challenges, and frankly the empathy for the journey to bear for these founders. And so, fast forward 2018 to 2021, we deployed through that vehicle, and now we're in the middle of COVID. I just stepped off of a 7-year operating stint across 2 companies, was
Hmm.
thinking about what next, and at the same time was getting a bunch of feedback from founders who we backed, LPs, saying, hey, we love what you bring to the table, we love your approach, we just wish you had more time to spend with us and more money to invest. And
You're
LPs
like,
were asking us, hey,
there's a way
when's
that we can
when's the
solve
next
that.
fund? Yeah. And so that was really the like, oh, maybe there's a path here to
Yeah.
turn Garuda more from a kind of off the desk passion project into a full-time firm and really codify our values in our approach to partnering with founders. And so came together with my co-founder Arpin Punyani, who I've known for over 10 years now. His sister-in-law is one of my best friends from undergrad. We met each other at her wedding, of all places.
I love that.
And he spent 8 years building Okta, early employee, all the way to publicly traded company. And we just sat down and, okay, like, what does it mean to be a fund? What do we want to focus on? Where do we want to spend time? And landed on, look, $30 million target for a pre-seed and seed focused firm investing in,
Oversubscribed. Sorry.
well, yes, thankfully, and we want to spend time working with founders at this very early stage because I think
Hmm.
that is authentic to who we are and where we like to spend time. And I think that's one of the keys to doing anything, is that you want it to be as authentic to you and your story as
Ooh.
possible.
I have a question. Like, I think one of the things, because I only spent a year as an operator, I was at WorkWest as a developer success engineer.
Yeah.
And I feel like one of the things that was surprising to me when I switched into investing is what came up again and again was onboarding. And it was randomly like an area I had a ton of exposure to at WorkWest. Are there any like areas of support that founders ask you about from an operational perspective that have like surprised you or been like, wow, I've like, but oh, like, you know?
It's not any in particular, only because I think that as founders, the founder journey always
Yeah.
ends up at the similar places. And so one of the things we try and do is like, hey, the first year you're going to have to pay your taxes. You're going to say, how do I do this? And so like, this is how, and like, how do we
Yeah.
make things easier for you? And again, having been, I was the seventh employee, first business hire at a fintech company called Poynt, which I joined after spending 4 years on the venture side. And so, over the next 5 years, I basically experienced all of these points along the
Yeah.
way. And so one of the things we try and do is like, how do we alleviate some of the cognitive load that you founder will be facing through
Cool.
providing you insight and or resources and or connections to
Yeah.
people who know how to do it? Because my goal and I view my job is to focus the founders in on what they need to do at the expense of all of this other stuff in order to be successful.
Yeah.
And like, you can optimize the heck out of your ops and your employee onboarding, your customer onboarding, but is that going to move the needle? Maybe, maybe not. And so let's focus on what's the product, what's the market, who are the customers, how do you go to market, how do you differentiate, all of that stuff as part of
Yeah.
your day-to-day, and reduce that cognitive burden.
I liked what you said. I don't know if you said this exactly, but it's like knowing the terrain. Like I feel like from
Yeah,
my journey as a fund manager, the first fund, one of the parts that made it so challenging is I had no idea what challenge we'd run into next.
that's right.
And I think like once you got there, you're like, oh shoot, like okay, like let's talk to like X, Y, and Z person who's had
Yes.
experience, blah blah blah. But you like don't know what those points and challenges are. And I feel like as you like settle into multiple fund cycles, you're like, okay, like I know this filing is
Yeah,
coming up. I know these taxes are going to be like whatever. And I feel like
that's right.
knowing the terrain where it's less ambiguous in that sense, it sounds like very helpful for the founders that you work with. Are there any like other things aside from paying taxes the first year that you recommend founders like look into, or, kind of like what other aspects of the terrain do you think are
Yeah,
important
I
to
think
mention?
we have the same conversation with founders about how to onboard your first hires
Hmm.
and what to look for and
Wait,
what.
please share with class.
No, look,
What
I
do you look
think
for with your first hires?
it's it's I think the scope, depending on the founding team, and
Yeah.
that's one of the things I always like is like, people ask me, how do you support your founders? And the honest answer is it depends,
Yeah.
because all founders are different and what their needs are different. And so we try and create a model which is bespoke to each team, obviously with a baseline level of communication and the like. And so, for your first employees, these are people who you have to convince to join you on this insane thing of a new company with tremendous amounts of risk, no idea whether or not it's going to work, but your passion for the problem that you're solving, the solution that you have, and the means through which they will be able to support that vision
Yeah.
comes through. And so this could be, and I was having this conversation earlier with some founders that we recently partnered with. This could be someone more senior. This could be someone junior and early in their career. You have to calibrate against what your objective is and recognize that there's a job to be done today. Too often we overanalyze the hiring process in terms of what I will need 12, 18, 24 months from
Yeah.
now. Forget that. You can hire for that then. What do we need to achieve now? And who's going to get it done the fastest today in order to progress forward, and calibrate against that, and an understanding of what you as the founder or founders are supposed to be doing, and what you want to bring other people into, again, supercharge this, again, group of people that can be fed off of one pizza, two pizzas in the early days.
A two pizza company.
Exactly.
That's awesome. I guess we were chatting about a little bit about this at the dinner, but how do you think like your fundraising process or like tactics shifted from raising a $3 million fund to a $31 million fund?
Entirely different in the sense of, I think the micro fund was very much a group of people and LPs who we got to know over time. Either we've known them a long time, or we got to know, and they were understanding of this is an experiment that we are
Yeah.
gonna run with. And I think there's something, there's a level of seriousness that maybe should be there, shouldn't be there when it's okay. Now this is like the full time thing, and so we wanted to up level across the board on everything we were doing. And look, we're constantly trying to get better in terms of our process, in terms of our communication, in terms of our reporting, things of that sort. So we went out and asked dear friends, people who've been there and done that, like what are some of the best practices that we can bring into the
What is
Garuda
the
kind of
terrain ahead?
ecosystem. What is the train ahead? Exactly.
Yeah.
And we were told over and over, look, it's going to be a long road. It's tough. It's tough sledding. And I think you can internally you can
Yeah, yeah.
intellectually
You'll
internalize
hear
that.
it. You're like,
But
okay.
until you go through it, you don't actually realize how
Yeah.
difficult it is. And, I believe there are three centers of intelligence in the body: the brain, the heart, and the gut. And oftentimes one is ahead of the other, and you just need all
Yeah.
of them to be aligned. Like going through a fundraising process, starting to raise in October of 20. We did our first close in Jan of 22. And then war in the Ukraine, interest rate rising,
Yeah.
inflation, market collapse, like all of that happened.
You had the
And
bank collapsing
the
too.
banks collapse. And so like all of a sudden, all of these things are thrown our way. And look, fundraising is not supposed to be easy. That's for sure.
Yeah.
But I could have never anticipated how challenging it ended up being. But looking back and having gone through it, grateful for it, because like you said, we have a deep understanding of the terrain and what is needed now as we project forward, and it's made us stronger for it. But man, it
Yeah.
was
People
not
say it gets easier over time.
easy. I think it gets different over time. I
Yeah.
think starting a firm, starting a fund, starting anything takes a big leap of faith. I think you have to just have persistence, and that's the key, right? You just have to believe in what you're doing. You have to have a deep desire, because people will see that over time. And so the benefit of time is people get to connect dots and make them lines. And so LPs that we talked
Mm.
to early on in the journey ended up coming in final close because they saw, okay, this is what we said we would do. We would invest in these types of businesses with this investment size and so on. And as we built the plane as it was in the air, we got to demonstrate that we were able to do this. And then we got people coming in, 18-month relationship that closed. Obviously a lot didn't, but that's okay too, because now there's relationships that we can go back to and say, hey, see, you didn't
Yeah.
come into this one, but you're going to be able to come into the next one. And this is what we continue to do. And you just got to survive.
And you just gotta survive.
You just got to survive.
You asked me, or I guess, do you have questions for me, or what are you curious about? What's
Yeah,
top
I
of
mean,
mind?
you've gone through this. I think you've done such a great job in, again, being authentic to who you are and your approach to partnering with companies, with other investors. You know, we talked a lot about how content has been a part of your
Mhm.
story and has elevated, I think, the awareness of Paige and Behind Genius, probably beyond, I would imagine, your expectations when you first started.
Yeah. Yeah.
And so, how has that opened up new avenues for you that you have been most surprised by? Or what
Mm.
avenues has it opened that you've been most surprised by?
That I've been most surprised by. I think like one of the things that's been really, first of all, like I think a lot about creative constraints, and like one of my constraints when I started is like there was no family money. I got out of school with no student debt, and I was like I was living with my parents first, and then I was living with like college girlfriends, and I was just like, okay, I really want to invest in venture and like be a student of venture. And creating content online has allowed me to become a meaningful part of an ecosystem that I have looked up to for a long time. And I think like imprint my own individual investing style and building behind Genius Ventures. So I definitely wouldn't be where I am today without writing online. I think it was kind of sad, but my high school English teacher always really encouraged me to write, and she
Mm-hmm.
passed actually like a couple weeks ago, which
Yeah,
was
I'm sorry
really
to hear that.
sad. Yeah, I haven't really talked about it much, but she was always like very encouraging of being critical with what you're reading and like leveraging different resources that you see in whatever ecosystem that you're in to be the point for you to like respond to that. And so I think
Yeah.
that's been really interesting, is to like use real-time piece of content generated by like other venture firms or news and be able to have a thoughtful response to that and like think critically about it and trust you mentioned like the 3 types of intelligence, like trust my gut, even if my perspective might be quite different from like other investors who've been at it for a lot
Yep.
longer. So yeah, I think surprising paths might be, now I'm like firms that I once got rejected for analyst positions are like reaching out to be featured on
Sure.
the podcast or like reaching out to be LPs, which I think that's been a very interesting journey as well.
Yep.
Yeah.
Yep. Well,
Yeah.
like the journey is long, and I think that's why, I say the word authentic a lot, because I think you have to be true to yourself and, your approach in order to be able to sustain and survive and
Yeah.
persist
Sustain this.
and have the grit required to navigate what is the inevitable emotional roller coaster of the journey of
Mm-hmm.
founders of any kind. Because you walk out of one meeting, it's like, oh yeah, that was awesome,
And
they're definitely gonna come
they're
in, and like
definitely gonna.
that LP's for sure gonna invest, I feel so good. And then, oh, you get an email from a portfolio company, hey, we're probably gonna be shutting
Uh,
down. It's like, and the emotional roller coaster is so high that
yeah.
it's, finding ways to modulate oneself and keep an even keel is critical. And having mentors, having people you can turn to, having guides for the terrain is
Well,
uh
I
is a
loved
key part
it.
of that.
I loved how you said too, like one of my mentors very early on was like, don't drink the Kool-Aid. Like you're gonna have
Yes,
like
ma'am.
press and people telling you you're great, like whatever, like don't drink the Kool-Aid, just focus on the craft. And I think that like you mentioned before, like having people that have seen like your dots turn into lines and that you can come back to as like a safe, supportive space and then be like build you up in those times when things get challenging. Like my family especially has been awesome for that. But yeah, it's definitely an emotional roller
Oh
coaster.
yes. Well, and,
Um,
and you mentioned family. Like, I think it's the other piece that is under discussed is the importance of having the support of one's family, right? Or the
yeah,
people that are around them. Because
yeah,
when you choose to start something, it's not a solo journey that you're going out into the wilderness
mm,
by yourself. Like, you're bringing along, whether you like it or not, your spouse, your partner, your kids, your parent, like the emotional support ecosystem that you've built over your lifetime.
yeah,
And it's, I think, critically important to get them bought in, because if they're planting seeds of doubt, or they're not willing to support you, or you're dragging them in
mhm,
unwillingly, that's a much harder place to be. And so
yeah,
to our comments earlier about like advice on hiring early employees, I told this to the founding team, is like, make sure you're talking to them, but also whoever's in their lives that you're asking them to
mm,
give up their person to the company, because they
yeah,
need to be bought in on the journey as well, because you're asking them to sacrifice their person for 16, 18 hours a day for
yeah,
like 7 days a week, sometimes for years. And so you want to build this stability, but it has to be a journey that people are taking, or it's easier to take when everyone's bought in.
yeah, yeah. I love that. I
I
I
would
feel
not be
like
able to do this without the
I know I
support
was
of
gonna say I
my
love that
wife.
you thanked your wife in your LinkedIn post. I thought that was so
Oh,
wonderful.
and
I haven't
she
seen like
is
many people do that, which is
the
kind of weird.
the most important person to the story for me. But I wouldn't be who I am without her. I wouldn't be able to do this without her, and her unwavering support of me, and frankly the nudge to go do it in the first place. So yeah,
Oh, I
my
love that.
significantly better half.
I love that. I guess I have a question. Like, as your founders like build companies and you see them grow, like how has your relationship with them evolved?
I think in the early days, you're just a lot more hands on, understandably, because
Hmm.
the boat is smaller and there are less people rowing. And so, we try and take a reasonably hands on approach. We want to have the context, we want to partner, we want to give you the advice, and again, lighten the cognitive load to help you go further faster. But as companies scale, as more people come in, as you hire more people, as you raise subsequent rounds of financing,
Yeah.
you don't need us in that same way anymore. And so for us, our goal is always, can we build such enough trust such that we're the first call? And
Yeah.
if we can get to that level, fantastic, because we want to maintain those relationships and give outlets to founders. Again, what is a very lonely job, can oftentimes you get stuck in your own head between the ears on what you're supposed to be doing and uncertain and can argue with yourself that leads to paralysis. Okay, how can we provide that outlet of that's rooted in trust, that's rooted in safety, empathy, but has context that can offer situational awareness and say, hey, you're looking at this the wrong way. Think about it this way, and so on. I just had that conversation here, like a founder of ours, doing many millions of dollars in recurring revenue, Series A and beyond, Series B on the way, and we chat, 20 minutes, like, hey, can I pick your brain on something? And he's thinking about how do you scale the go to market team and how does he balance his own relationship with the customers
Yeah.
and get the team involved. But how do I think about then product as well? It's like, hold on, take a step back. You need to give away your Legos. You need to think about how to grow your org and how to hire the right people to then be able to focus on things that you can do. But I can see that from context, and he's willing to share that with me because of the depth of the relationship. And so,
Mm,
it becomes less frequent
yeah.
touch points and less structured, which makes it a little bit more chaotic, but I think allows you to synthesize down to what actually matters, and then hopefully offer insight that solves a problem.
Mm, I love that. Oh, I was talking with someone about this yesterday in a group of like other VCs, but like, how do you find you come to conviction? Is it immediate? Is it something that takes you a lot of time? Like, how do you think about that? And I know your answer is going to be it depends. I
You're
have a
right. We invest in areas that we know most
Mhm.
often, and so like categories or markets or spaces, and so we have some level of depth or formed opinion on a market, on a category, on a problem. And so then it largely comes down to first and foremost the team. We're getting in formation stage, early stage pre-seed rounds, and so there's a deck and a dream, and
a deck and a dream. I
maybe
love that.
some level of early product, maybe a customer conversation or two, or design partners that are signed up, and so on. But it's really an analysis and an evaluation of the team, and I think to the earlier comments on like the head, the heart, and the gut, a
Yeah.
lot of times the gut is like, okay, this feels right. Like, okay,
Yeah.
something is vibing. And I try to let myself be awash in the optimism during the pitch meeting of like, okay, what's the upside? How big can this go? What are the knock-on effects and so on? And then you got to take a step back. You got to understand, okay, let's intellectually look at this market. What are the challenges? Who are the other players? And do the work. But largely there's an affirmation of something you felt early on about a person, about a team, that then you're trying to, okay, what was that little
Am I
signal
right?
that I got?
Yeah.
But there have been other times where it's okay, there's a belief there, but I don't know if I'm fully sold yet. And then you look at the person, and again, to the spirit, in the spirit of connecting dots to make lines, you have a subsequent meeting. This is a progress that I've made. You've had a subsequent meeting. Okay, this is what else has changed. And now you can see the iteration, the pace, the speed that, again, is indicative of determination, a greater persistence, and a cycle, that clock speed that they're on, which again helps with, okay, yeah, the early instinct is there. And now I'm actually feeling it even more. That answered your question,
No,
but
it did. I
yeah.
was thinking one of the things that can be challenging as an investor is that you don't know if you're any good for like
Oh,
7
yeah.
to 10 years. Like, how do you hold that in your hand along with like operating a venture firm?
Oh, incredibly painfully. It's really hard. People ask me, you made the switch from venture to operating back to venture. What is hardest now? You still won't know if you're any good for a decade. And unlike in operating, where it's like, okay, you can make a change to a messaging to see what the conversion rate is. You can change the color or size of a button or thing to see what the click through rate. Like, none of that exists. And so you can have what you think is a great week and not write a single investment, which is most weeks. And that's a good week in venture. And that's just the hard part. And so I think it is rooted in just again belief in an approach to working with people, intellectual curiosity, and a love for the privilege that is this job that keeps you going, and constantly just trying to also be paranoid at the same time,
Yeah.
because a healthy paranoia is important. And getting to your point about conviction, like, how do you just keep getting better and learn from different people, take the best of others, whether you know them or not. You can read about them, and so much is now the venture ecosystem is exploded in terms of content and what people are putting out there, how they think, and so on. Like, how do you digest all of that and internalize the pieces that resonate to you to make yourself better? But it's terrifying. I am terrified constantly. Then you wake up one day like, well, damn, that sucked.
We're really saying the quiet part out loud. I feel like that's been
Yeah.
the summary of this episode. I feel like it hasn't really been a question I've like asked many other people, but it's definitely one I think about constantly. Okay, I have one more question for you. What are some of the trends or movements that you're seeing that you're really excited about? And that can be like from an investment perspective or just like things that you've been curious about recently.
I think what is constant is the idea that humans never change, and so we're just an evolution of how we think about the problem sets that we're given. AI is all the rage, and so you're constantly, okay, are you investing in AI? What are you looking for in AI? Okay, hold on, what do we have to think about when it comes to any shift in technology? Okay,
Yeah.
security important. Like, how are we going to secure all of these things? How do we ensure that it's delivering the right message with the right data and so on? And focus area of ours, how do we spend money and use and make payments and all of that constant? And it's just an evolution of technological. That's an area we're focused on. How do we think about the user engagement and user behavior and interacting with these new technologies? That's an area we're looking at, as well as it pertains to, on the SaaS side, how can software
Hmm.
drive greater efficiency and give people back time? And so, the more things change, the more things stay the same. But I think we're living in great times right now because it's difficult. And through difficult times come innovation, come breakthroughs out of necessity in a lot of cases. And so I'm just grateful to be able to partner with founders who are willing to start something in crazy hard times because they have that much motivation and are willing to do the risky thing, as opposed to which is, I'm not saying it's right or wrong, but lots of people are more likely to stay in comfortable situations, particularly during times of risk or increased risk. And so being able to partner with founders during all this is great.
I love that. As we wrap up, do you have a final question for me? Anything else top of
Yeah, I
mind?
mean, one of the things that I'd be curious to learn, because it's something I've been grappling with, is how do you think about managing time?
Mm,
Because one of the struggles I think as
hmm.
an investor is part of our jobs is to meet a lot of founders and build out frameworks and assess companies and so on. But I think the flip side to that is, so often then your calendar doesn't become yours, it
Yeah.
becomes others. And so how you're obviously prolific in your content creation, you're prolific in your reach, and you clearly dedicate time
Yeah.
to these things, along with building a firm, working with your portfolio, supporting your founders. How do you structure your days and or weeks to
Ooh,
give yourself this space for this?
that's a really good question. I mean, I think to take the words out of your mouth, it depends. I think that a lot of things have gone back to in person. I think it was a lot easier to structure my day when I wasn't traveling as much and I was
Hmm.
just like taking Zoom meetings. And so now I'm thinking through like the priority of like which people in which cities do I want to invest in spending really quality time with, whether those are our founders or like some of our larger LPs or like co-investors I really like working with beyond like obviously my friends and family. And so that's like become a bigger part of the equation when I think about how to manage time. So oftentimes
Hmm.
when I travel, I like won't take Zoom meetings within that time
Yeah,
so I can
that's right.
prioritize people in
Be
that
present.
city.
Yeah, totally.
Yeah. So when I'm in San Diego, like that would be like my baseline. I'm usually in Zoom meetings from like 10 to like 4 p.m. And that can be any combination of like meeting with new founders, meeting with existing portfolio founders. I try and like structure it throughout the week. So like Monday, I have time to like catch up and go through my inbox. Tuesday is like strategy. And I have like two members on my LP advisory committee. So I have like my monthly meetings with them. And then I
Hmm.
have a monthly meeting with our bookkeeper. So Tuesday is like long-term strategy oriented. And then Wednesday, Thursday are usually like bulk founder calls. And then I I've been trying to keep more of my calendar open so that I
Yeah.
can be like open to synchronicity. Like one of my founders just called me today and he was like, I have this great company for you. And like, because I had the like time open, I was able to like take that call and have that
Sure.
conversation. And so I think that like sometimes there is an urge to like schedule your day to the gills, but
Mm-hmm.
you might miss like sitting in silence and being bored and being like, oh, I should call this person I haven't talked
Yep.
to in a while. And I feel like that's always resulted in the best things. Or just like texting my other emerging manager friends. I texted my
Yeah.
friend Ariana and I was like, hey, like, how are you thinking of you? And she's like, let's plan a tea ceremony next month. And I was like, I would love to do that. So I'm moving towards more unstructured time.
Yeah.
And I think in the fun seasonality, it'll be like a few months of like very hecticness. And then there'll be like a longer period where I want to be like patient and make the best investment decisions possible. And I also think that's really difficult when you're in meetings all day.
Yeah.
But
No, it makes sense.
that's how I think about it. I try
That
and
makes
like
sense.
be active every day and like see my friends and hang out with my fam. So
How is and in that, when you have the unstructured time and
mhm.
you're, you meet a founder and now you're going through kind of a diligence process,
Mm,
as you have kind of now seen many more companies, diligence a lot more companies, invest in a lot more
yeah.
companies. How has your process to conviction and diligence process gotten simpler, easier, shorter, longer? How has that changed over time?
I think similar to you, it was like a lot less formal in the beginning. And now, well, especially like because Josh and I were partners in the first fund. And so, like, every investment we'd be like back and forth, back and forth, back and forth, and like talking through each one of them. And now, like, we have an investment analyst, Andy, who does like incredible research on like each opportunity. I do 2 reference calls for like every founder that I'm looking to move through the pipeline with either like previous investor or previous colleague. And so I think like the process has involved a lot more context, but the first form fund is performing well, so, like, and that had an informal process, and I think I'm trying to strike the balance of, like, a repeatable investment framework that someone else could apply one day down the line, and one that feels, like, correct in following my intuition as an investor. So, yeah, I try and be transparent and communicative through
Yeah,
the process. Sometimes I'm a little slow in my emails, but
that's okay. Yeah, makes sense.
Yeah. Yeah. So that's how I think about it. This was so fun having you on. I'm so happy that you could come on and that we got to share this conversation today. Where would you like people to follow you on the internet, or if they're a founder listening and interested in connecting with you, where can they find
On Twitter or X, Taps, TAPS, at Taps. Substack, taps.substack.com. We have Garuda, our Garuda Substack, Garuda, Garuda.substack.com. And then emails to Rishi, RISHI, at Garuda.vc.
Cool. Thank you.
And a very special thank you to Seed to Harvest podcast editor Tate Doherty for his amazing work on this episode.